Okay, good morning everyone, and welcome to this live intraday strategy webinar in SB Trade Desk. Today is Tuesday, January 26th. Great to be with you guys. Permendra, thank you for that. Eileen says good morning, glad to see you. Hope you were all well enough to ski a bit in the backyard. Heard you folks got a bit of snow over the weekend. Yes, we did. Little blizzard-like conditions. Welcome back, Mike, says Gary. Thanks, guys. I do apologize. It was out. A little bit of medical issues to deal with on my end, but we are back pumping on all cylinders. So it's good to be back, guys, and I appreciate all your well wishes while I was away very much. All right. So there's a lot to talk about. Let's jump right into the charts. A quick look at the US dollar heading into the US session. You can see a split decision so far in the performance. CAD up 0.7%, and certainly we'll be looking at that trade. Aussie also with a gain of 0.36. That was coming at some resistance we were looking for overnight, or some support rather. Swissy down 0.31%, and again, that's helping out the swing side of trades, which are on the Swissy as well. So as always, guys, we're going to go through the last couple of setups that we've been following on the intraday side of things. Feel free, as always, throughout the course of the webinar, if there are any questions or specific trades you want to look at, I'd be more than happy to take a look. Also, keep in mind, for anyone who's new to the room, there's a camera button in the top right-hand corner of your screen. Feel free to click on that if you need to take a picture of any of the charts presented throughout the webinar. All right, let's jump right into things. So the dollar index, looking at that right now to start off the week, has sort of been lackluster. You're looking broadly at this formation. I'm not really too aggressive on any of the dollar crosses, save Aussie dollar, which is something we've been looking at. Dollar yen, Mustafa, let me jot that down. We'll definitely take a look at that if you'd like. I haven't been too interested in dollar yen, but the yen crosses have still remained rather interesting. But we'll definitely take a look at that, Mustafa. The dollar index, again, you're seeing some split decisions as far as the performance of the dollar crosses. So the index has been widely holding this range. Only thing I want to highlight is just that upper median line parallel, or the median line rather, for this formation. Turns out being the same slope as the median line parallel for this formation. And on a closed basis, has continued to respect that as resistance. So that's the only thing I'm sort of watching on the dollar index. Watch that median line as resistance. Support is going to be the weekly opening range low, which isn't too far off. It's just above that 12,250 level we talked about last week. So real lackluster on the index. Here's what it looks like on some of the setups we've been following. So first things first, Euro Aussie. Here's the daily. And Euro Aussie was one of those ones that was really nice coming into the start of the week. We put this on the radar charts. Let me bring that up real quick. Whoops. Here's what it looked like to start off the week. Okay, we're in this descending channel formation. We start off the week just above support. So 53 is still like the key level I'd like to see tagged on Euro Aus. We talked about it on Sunday. This is sort of like where we would have wanted to find that last low to play the rally. Didn't quite get it. You got the break above 54.70. That took out targets at 55.30 and that resistance confluence at the upper median line parallels, which you're looking at right here. So with that move in overnight trade, here's what we looked like last night. We were just coming into this region. So I actually was looking to put on a short. I didn't have it on yet. I missed the entry in overnight trade, so I missed off on that. But the premise of the trade was very clear. Momentum was coming into the 70 threshold. Price was coming into resistance. You'd essentially look for that 70 hold in momentum and a trigger break to put you in the south in the shorts on the trade. You got a false break in overnight trade that came up and tagged that 50% retracement right at 57.07 before coming off. You might have gotten fooled on that thinking it was a breakout, but there was a couple of things to keep or to clarify that. First of all, you had divergence in the momentum signature. So on that rally into a fresh high, momentum could not clear the previous high. That was backed by that trigger break that inevitably gave out that we were looking at last night. So a little bit of a tricky player here, but the entry would have been on that trigger break to the downside against the highs. Again, a much wider ATR, guys. You're looking for about 73 pips per scalp here. So keep that in mind when you're looking to get into these positions. But near-term target at this point is coming right up at that 50%, 54.68, 54.70. And then that 53 region is really a key region that we were looking at earlier in the week. So everything still looks pretty clean here on Euro Aus. And you're looking at that near-term support at 54.68. And again, down to 53.25, 53. You're looking at the median line off the highs. Looking at the 618 retracement, a 1618 extension of that decline, and a longer dated 50% retracement off the decline from the highs that you made. I think it was October. Yep. Any questions on Euro Aus? Eileen said that Euro Aus went well above the ML. How would you have considered that in looking for shorts in early European trade? So you're saying on this break, how would I have known not to follow it? You don't. You don't. Let me show you the near-term chart. So what we're doing is following momentum, right, Eileen? Euro Aus. Let me bring up the 5-minute chart real quick. So here's that rallying overnight. We're looking, this is the bearish invalidation level, right? So as long as price stayed below this region, we were looking for shorts. So heading into the European Open, here's the Sydney opening range and the Tokyo opening range. It looked like it broke to the upside. And this would have been a fake out of monumental proportions. The only thing is this, Eileen, there would have been no long entry here. So while you don't know that it's a false breakout, it shouldn't have prompted anything. And that's the thing that we want to keep in mind. So we're looking for a short. If it breaks, we're not going to go chasing the market and break and buy this breakout, right, Eileen? If anything, you would have needed a pullback to get us a better entry towards that. Well, on that pullback, you can see that momentum clearly failed right at 50. And that's where you would have started to see the divergence that you're seeing on the broader chart. So the 30-minute chart, price action making a new high, failure to make a new high. Now you're on the lookout for some short entries. Does that make sense, Eileen? Kind of walk you through the thought process? So yeah, we were looking for shorts as we were heading into that region. We didn't get any triggers, actually. We broke higher. Doesn't mean that we go long. We never got any long entry to trigger even a long trade. So on the way down, there is one trigger right there on the 5 we would have been very excited in getting to. Again, divergence into the highs, followed by a trigger break. Talk to me, Eileen. Does that make sense? Eileen says, okay, I see that, but once it turned, then seems no short entry because too far out for a short by the time you see it. So you can see here what I'm talking about. Yeah, you would have probably missed the actual entry to get on the short side unless you would have gotten to see this trigger on the 5-minute. Even if you had taken it from here, 56.40, you're basically still looking at a 70 pip stop. That still would have worked. Still would have worked. So it all is determined by the how far, if you can put that quarter of a daily ATR, if that stop puts you against a major high or low. So as long as you would have caught that trigger within 70 pips of distance off that high, I still would have jumped into that position. She says, oh, I see the trigger break. Okay, for the stop. You got it. We on the same page, Eileen? Great questions. Chip, SPX, if you have time, great to see you here. I appreciate your email there yesterday. Yes, we will definitely take a look at the SPX for you. Let me jot that down real quick. All right, Eileen says, yep. All right, cool. So look for near-term support here heading to 56.48. Remember the longer-term picture, guys, here for the Euro Aus. We're still working with an upward slope. I'm just thinking that this thing goes into the 53 handle to complete 3 waves down, okay? And off the highs, that would complete a 1618, okay, into the 53 handle exactly. So I still think the probability is there for this thing to make that low before we repire. The broader uptrend is still intact, essentially, while in that 53 zone. A huge pivot in price, this whole zone, 53.35 into 53.30. It's the 618 off of that swinging December low. It's the 50% from the decline off the September high. It's basic trendline support extending off of the December low. And it's that basic pivot in price, catching the highs that you made in December of 2014 and the high that you made here in August for the opening range. So there's a lot stacked up there. So still looking lower here on EURUSD. And it kind of coincides rather well with what we're looking to do on the broader Aussie pairs that we've been looking at. Obviously, swing trades. We're looking at the Aussie long yesterday. And we'll go over that in a moment. Any questions on EURUSD before we move off? Going once, going twice, sold. All right, let's move on. Next chart up on tap from yesterday was the EUROKiwi. It was a very similar setup, only EUROKiwi, here's what the daily chart looked like. Here's what we look like now. Only EUROKiwi was coming off of a really nice support structure here. Okay, similar in that you feel like you have another low to make to complete some sort of correction before we move off, but on the intraday chart, the setup was really against this region here. So if you read yesterday's report, we were talking about essentially wanting to hold that resistance right here at 68.80 is where we would expect the thing to find resistance if we're going to move lower from here. Nice confluence of the 1618 extension off the low, a 50% retracement off the high. And again, momentum last night as we came into that region was right into resistance at 70. So very similar setup. Only this one, you didn't quite get the major fake out that you got in EURUSD. And I think that's just because you saw a little bit more Aussie volatility last night. Long story short, on the subsequent push into resistance, again, some beautiful divergence. And I really can't stress these enough, guys. Divergence in and of itself doesn't mean jack. You can get something making divergence for a day, a week, a month, right? It's the divergence into the trigger break that typically ends up being a good setup. So you had a couple of triggers here last night. This is another one that I was looking at off the low on the 30-minute, came a little bit earlier. Another wide range scalp, also looking about 70 pips per scalp. So if we bring up the near-term charts for this one, sorry about that. There you go. I knew I saw it. Here's what the near-term trigger looked like on that too. And the same type of deal, guys. This happened across all of the Euro crosses, all of the Aussie crosses, divergence into the highs, backed by a trigger break. This would have been a trigger, would have been 68.45 entry against 68.90 or 69. Nice 50 pip stop, looking for 70 pips. You're well on your way there already. Okay, so you are checking near-term support. I wouldn't put it past this thing to make another run at that median line parallel before we move off. But the bottom line is if we break back below the median line, we're good to go to continue into subsequent targets. 65.27 is the 50. We tagged that last week. This is the major support here. Just as 53 is to EURUSD, so is 63.50 to EUROKiwi. Big region, big region. Nice pivot, multiple 618s. And just a really big region of support here for EUROKiwi moving forward. Any questions on EUROKiwi? We're flying through these today. Gary says, hi, Mike. As soon as you can, could you take a look at the abomination? I've missed your views on this pair. Thanks. Yeah, we will take a look for sure. Dollar yen. Gary, that was you who asked for it earlier? Or was that someone else? Mustafa did. So we'll take a look at dollar yen right after this, all right? Just jump into it just in case there's anything going on now. Eileen says, looking for longs into this morning EUROKiwi. So I would be interested in playing a decent long position if 40 holds and you get a decent trigger on the upside near term, Eileen. But remember the broader structure that we're trading within, right? The median line here. So it's still, we were looking just to sell a rally in this pair. Remember what the broader picture looks like. I would be much more interested in a long down here, Eileen, along the confines of this structure that we're in. That'd be a 50. Again, be a decent area. We'd look for some support. But from here, not really looking to fight the trend of the day here. You know what I mean? It says, okay, wait for the break. Yeah, so Eileen, when we're trying to play a counter move, and again, a long would be a counter move for the last 2 weeks, you want to be at, like I said, always want to be playing it from a position of strength. So against the weekly low, against a major support confluence, but you neither have structural support here nor a major higher low for the week. In fact, you're not even at the weekly open yet. So I'd be looking for, for me to look for long exposure, I'd be looking for either a move closer to this low or closer to the median line to try to do that. If you feel if you missed out on the short, then you have, no big deal. The market will always offer more opportunities. The worst thing we can do is try to jump into a position because it's moving without us and we feel like we're kind of missing out. So rather than playing the long here, I'd rather, if I'm holding a short, I'd be taking some off, bringing my stops down to break even, seeing if you can get that extension lower. If you're trying to play the long position, like I said, you need to play it from a position of a little bit more strength. If 40 holds momentum and you see the opening range for New York, for example, give out to the upside, you have a New York low to trade against, sure, it's at support. That might be the way to play it. But as it stands right now, you're sort of just trying to catch a falling knife. Okay, let's take a quick segue here for Mustafa and Gary. They're really interested in watching the dollar yen, and let's just take a quick segue and we'll jump into the rest of the setups. Again, as you guys know, I haven't really been paying too much attention personally in trading dollar yen since that breakout last week. Look, I think you still have some more upside to go. I don't like what the dollar index is doing, so there really isn't a position, for example, play on this, even near term, but I'd be looking for that rally into the trend line resistance or the upper median line parallel. Today, that comes in around like 119.30 or so, 119.20. Let's see what this retracement looks like. Hey, look what's there. 119 basically is the 38.2. We'll leave those. So area of possible interest for dollar yen's resistance. Came off a big region last week, real big region. This is a median line that extends back all the way to June of last year. You had a sliding parallel extending off the highs from that late August swing, which also caught the lows. You had the 1618 extension of the entire decline off the June high. This is off the 2015 high in general. And a real strong reaction, So yeah, I think you can still stretch a little bit higher, but that's sort of the resistance zone I'd be looking for, sort of like 119, 119.30. 30-minute chart looks like this, guys. Again, so these are some descending slopes off the highs that we were making from that November, December peaking process. You can see that median line still offering some decent moves here against price. Here's the weekly opening range. On its face value, the way I would want to play this is just a basic opening range break. If we get the basic opening range break to the upside, look for that confluence region into 119. Again, a little bit off on the slope here. Break to the downside, which would be a nice break of that 117.77, 236 retracement. Weekly opening range low comes right at the median lines there. A break of the downside, you're looking continuation. I would actually be looking for a new low in that regard if we do break below that. But nothing here really interesting for me on the near term, guys. Mustafa, Gary, tell me what you guys are looking for specifically if you're looking for positioning on this. Doesn't appeal. It's not too appealing to me as being extra sexy or anything over here. If you put a gun to my head right now, I'd probably say you look for a break above 119 to check that upper median line parallel, 119.30 area, a little bit below there right here before we move off again, but not currently involved. Mustafa says, I'm looking to short dollar yen. So on the short side of exposure, yeah, that's, like I just told you, that's sort of where I'd be looking as my first area of resistance. Gary saying, I'm just looking for your general view, was wondering what it was up to. Yeah. Listen, for me, Gary, I'm all over dollar yen if the setup is there and it's warranted. Other than that, um, I don't want to tell the story again. For those of you who've been with me for a while, you probably heard it a million times, but dollar yen and me were estranged very early on in my career. I had a lot of losses on that massive breakdown from 113 back in 05 and 06 and heading into 07. So if the setup is there, we'll play it. Otherwise, you want to be a little bit excessively cautious. There's a reason we call it the abomination, right? Permendra says, hi, Michael. When you have time, please look at Euro Pound. Ooh, love it. I love the Euro Pound. We had that on the scalp setups last week, if you remember. And that's odd for us because Euro Pound typically has a very tight ATR. They are pound pips, but it makes for a little bit tougher of an environment for intraday traders. We'll definitely take a look at that, though. All right, so that's the abomination. A quick segue. Let's jump back into the charts from last night. So we went over Euro Oz and Euro Kiwi. Any questions on either of these? Both setups levels are unchanged and the outlook is unchanged. Both looking pretty good. Euro Oz now checking support, or EURKiwi checking support here. As far as Euro Oz is concerned, also that's coming into that 154.68 region of support, and we'll keep our eyes on that for those pairs. Moving right along. To the other crosses that we were following from the previous day's report, but these were also highlighted on last night's radar charts. All three of these pairs, again, all exemplifying beautiful moves. Still, overnight trade, we were talking about the Aussie dollar. That was looking at support right in the face, 69.36. You had a nice confluence region. This was a previous major swing low. This was the 50% retracement of the advance from last week's low. You had the lower median line parallel there, all confluencing right around 69.36. Here's what Aussie dollar looks like now. Okay, so again, as a disclaimer, this we are still holding a position on. I did get off of half of the position at 25 pips and overnight, but another one where a beautiful, little bit of a lesser of a fake out, but the same type of gig. Eileen, who else were we talking about? That Permendra, you guys were talking about earlier in the morning or earlier in the webinar. Beautiful fake out, but divergence, price action lower low, the oscillator higher low into a trigger break. Wasn't the cleanest trigger break here on the 30. This one, actually, the cleaner trigger breaks were all on the near-term 5-minute charts. Okay, you're looking for 25 pips. The first target I highlighted wasn't until that 61.8 retracement, which is basically the 70 handle, but still, we're remaining disciplined to our strategy. So at 25 pips, a limit got taken out, stops at break even at this point, and we're looking for that stretch into 70.07, and we'll look to remove the rest of the position from there. On a pullback, for if you've missed that position, you're trying to get back on the longs, and a swinger holding long positions on this as well, I'd be looking for a move back towards like 69.60 or so. These swing highs, maybe another check of the median line, that would offer a decent attempt at an entry at alongside. But from a scalp standpoint, guys, I wouldn't go chasing this with any entries near here yet. You want to wait for that pullback into a trendline support again, or if we break through, if we don't get that pullback, you wait for another tag of former resistance, then support to play that next leg up. But do like the Aussie trade. Again, the limit, my limit just didn't get taken out, is at the handle, literally. Okay, so the high was 69.92. Almost there. Almost there. And again, from the daily chart, you can see the key zones that we're trading from. It's a good thing that we held that median line here today. On the upswing, you're looking for 71 as possibly the major area of resistance for Aussie dollar. Broader dated upper median line parallel, former trendline support, now resistance, and the 50% retracement of the entire move. That's 71. And let me just, that's 71.05 right here. Let me just see one thing, guys, as well. We don't know that this is going to be a functional or an operative extension because we don't have that much concrete evidence of this low yet. But if we do this, just want to see where that 100% extension comes out. $71.36. Okay. Okay. So I'm going to remove this 618 because if you get the breakout above that 70.37 level, I think you're going to see this thing run. But I am going to leave that as a subsequent target here. We would start to look back towards the short side, guys, near 71. But with the 100% extension there, it screams sort of equal correction. You could see that false break or another move of that before we turn over. Let's not count our horses before we get there. Long story short, immediate resistance at the 70 handle. Look for support along that lower median line parallel. We're going to go ahead and bring up or keep, was the bullish invalidation level still there at 69.36. Any questions on Aussie? Eileen, was that the Aussie that faked you out last night? On Aussie dollar, yeah, on that breakdown. Remember one thing, guys, price action is always what tells everything, right? That's what guides us. We are hardcore price action traders, myself and Jamie. The fundamentals are always in the background theme of what's moving markets, but day to day, from a trader standpoint, we try to focus on price action. So remember, Eileen, we have a bias, right? And we have our invalidation levels. The burden's on the market to go ahead and break that and invalidate what I'm thinking or validate it. So you know we're looking for long. So even though you're getting this break, the entire time momentum is still above the previous low. You know, you want to take note of those things. You want to take note of those things. And certainly on the near-term charts, you saw that same thing give out, the trigger break, right, on all those trades. So, you know, price action is what's guiding us, but we have our analysis and we have our bias. The burden's on the market to invalidate what I'm thinking. And if the market is breaking below this support, which I'm noted as, which we're noting as our bullish invalidation level, you have a three-way confluence here. Again, this is the lows that you made way back here in October, okay? A 50% retracement, the median line operative, which we've been in for the last 5 weeks, all these things. To me, I need to see that the market confirm this break, and you couldn't confirm it in momentum and the speed of which it quickly reversed. You want to take note of all those things. Obviously, hindsight's always 20/20, Eileen, but just trying to put you in the mindset of what we're thinking. We have an opinion on the market. If the market's moving against our opinion, I have to see a couple of things to validate that, to make sure it's not a case like this. So I want to be looking for intraday momentum. I want to be looking for near-term price action to tell me that picture. So I hope that helps. Mustafa, Aussie Yen is up next, my friend. So if there are no other questions on Aussie dollar, initial target here, major resistance on the near term takes you into that 70 handle, 70.30, 70.37. Big resistance is going to be up in that 71 region in the upper median line parallel. Aussie Yen looked like this last night, another beautiful player here. So Aussie Yen, the basic premise here was the chart that we had supplied in the Sunday update. Both of those initial first targets got hit. So 82.47, 81.60, 81.86. Last target was 81.90, but you saw this thing coming into some support here on the momentum signatures. So the focus is looking lower. Inevitably, we're looking to buy this. Here's what Aussie Yen looks like now. Daily chart. Here's a 30-minute chart. Okay, so the decline didn't quite make it into that 81 level. It was 81.05 into, 81.20 into 81.35. Didn't quite make it. The low that you made last night was right at 81.46, so a couple of pips off. And then you saw momentum bounce right off that 20 and give us a trigger break to the upside. And this is one of those trades where the trigger, if you weren't holding a position or if it wasn't going to prompt a new position, was a really good way to get out. So if you were holding shorts on this, on a move like this, this is when I would bail out of a short position, is when you see the trigger break against your bias. We were bearish, and then you see price action break trend line. So you're breaking resistance in price, you're breaking resistance in momentum. That would have taken us out of any short exposure. As a disclaimer, I haven't had any positions yet personally this week on Aussie yen. But a beautiful trade that we started off the week. Here's what it looked like, guys. If you remember the intraday update from Sunday, here's what it looked like early in the week, right? We were talking about this specifically. Oh, that's weird. I'll look into that. I'm not sure why it's doing that. But anyway, oh, here we go. We were looking at this specifically coming into resistance and looking for the breakdown into those near-term downside targets. 80.88 was going to be a 618. Here's 81.35, that target that we just missed here. Turned out to be a 1618, just lower. But you get the picture. This is an opportunity where you see how we can play the position on both sides within the same week. You started the week opening at resistance, looking lower. Reversal in momentum, break to the upside, couple of opening range breaks to the upside for Europe even, and here you're seeing recovery. At this point, you've now made a beautiful weekly opening range just below resistance. So all the more conviction I'm playing alongside if we do mount and break 83.50. At the same time, if we break the downside, then you're looking for a much steeper correction here because you're out of this formation and the weekly opening range low. Any questions on Aussie yen? Also note one thing that we're looking at as well is momentum, change in momentum, right? This is the first 60 break that we've seen this week after holding 60 resistance on the downtrend and traveling well below 40. So if this holds above 60 on a pullback, we want to find support at 40. If you find a trigger with support at 40, that'd be an opportunity possibly to get back on the long side here for Aussie yen. Does that make sense, Mustafa? Dave says, does your win-loss ratio hold with smaller TFs and smaller take profit and stop losses in general, regardless of the pair? Dave, so I'm not sure what your question is. Does your win-loss ratio hold with smaller take profit and stop losses? Yeah, so your win to loss to losing ratio in a scalping strategy needs to be above 50%. That's hard to do. But if you're working with a near-term strategy like this where you're working with a risk to reward ratio of 1-to-1 typically on the trades, then yeah, obviously you need to have a better than 50% score on win to losses, which is very difficult to do. This is why we're not strictly a 1-to-1 risk reward, right? Anytime you can improve your risk to reward, guys, it's always going to be in your best interest. So I can't say that all my trades are 1-to-1 risk reward. That's the maximum. If I have a lot of conviction, I'll jump into the position. But typically, we're always looking to have a stop that's going to be much closer to your, much closer or much smaller than the profit you're looking to take per trade. Not only that, but there's a lot of positions, Dave, where we don't close out the entire position. So a lot of the scalps I'll take will be one where, not just to use this as an example, where you're in short, you take a little bit off the trade here, you bring the stop to break even, and you play into the next subsequent targets. So it does tend to skew a little bit. When the winners turn out to be winners, they tend out to be a lot larger winners because we will ride those swings, as it were, sometimes well beyond the initial profit target. So Dave, I hope that makes sense. He says smaller time frames, for example, divergence on a 1 minute and take profit given by a stop to be 1-to-1. Yeah, so you always want to have 1-to-1. I'm not sure what your question is there. We use the smaller time frames, Dave, as triggers to jump into the position. So I always have this 5 minute here because this is what I'm looking to jump into the position. This is what's going to initiate me taking the trade. Once I'm in that trade, your stop is based on wherever the next technical level is. It needs to be within a quarter of the daily ATR. And your limit, as you come through the targets, you're simply taking a little bit off the trade. Take a little bit off the trade. Next target, take a little bit off the trade. So we'll tend to ride the winners a little bit more, ride the extension a little bit further on a winning trade, whereas a losing trade, as soon as it moves that full, X ATR away, we're out of the position, done. Tim, great to see you in the room, says, general question, how do you find setups for a pitchfork on lower time frames? I find them easy to spot on longer time frames, longer term charts like dailies and upwards, but 30-minute charts don't have as clear picture action, clear price action to me. Any tips, Tim? It's just experience, my man. That's all I can really tell you. You can find pitchforks on any time frame. A lot of times it's just working with the levels and kind of just getting your hands wet and trying to see what the market offers you. It's the same exact mentality that you're approaching on the daily chart, guys. It makes no difference. Obviously, you don't want to put as much emphasis on a 5-minute pitchfork as you do on a 30-minute or a daily, but you get the picture, Tim. Honestly, it's just practice, man. Practice makes perfect. Spend a lot of time with the charts, and that's pretty much it. There's no. Wish there was a key or a quick tip I could give you. He says, okay, great, thanks. You're more than welcome. Dave says, question is whether your win to loss still holds if you are only looking for smaller time frames. You're not setting up with 30-minute. Sorry for the confusion. Oh, I misunderstood your question at all, Dave. Absolutely. The setups and all the levels are strictly derived from the 30-minute. The 1 minute and the 5-minute that we bring up, guys, is just for entry when you're looking on the trigger. That's it. The 30-minute chart, the daily chart, that's what's guiding us. We're only looking for here to actually give us the trigger to jump into position. Once I have that, I'm straight on the 30-minute to what my next target is. So I hope that helps, Dave. No confusion there, man. I just want to make sure we're on the same page. Eileen says, another great question then. How do you get your ellipses to work? Mine are pin dots and won't move either way without grabbing and moving. These, right? It's tricky and frustrating, but if you hold down control, guys, when you're drawing any overlay chart, you can just make a copy of that shape or line or whatever. So just make sure when you hover over it that it's highlighted before you click. Make sure you don't mess up your charts. Anyway, back to business. All right, so if there are no other questions on Aussie yen, the other setup from last night that we were following, again, this is from Sunday, is Aussie Swiss. So Aussie Swiss looks like this. Another one where earlier in the week on the update, we were talking about Aussie Swiss. Here's what we opened the week looking like, and Aussie Swiss was opening the week just below a nice resistance confluence, 171.40 into 171.60, 1618 off the low with 38.2 off the high, and you had trendline resistance right there. Here's what Aussie Swiss looks like now. And it's a weird pair, right? Typically don't put too many setups on Aussie Swiss per se, but like I said, if the setup is there, the setup is there. So here's where we started off the week, and initial support, we're at resistance. You saw some divergence into those highs and a trigger break into last week. We were looking lower. Initial target at 70.65, 70, what is that, 70.15, 70.21, and the 50% was the bullish invalidation. So as long as we hold above this level, we actually want to look for this pullback to get into some long entry. And that's exactly what you got. So Aussie Swiss came into the initial target, 70.65, 70.20, 70.15 right here. This is the bullish invalidation level. We marked that as our bullish invalidation level at 69.75. Divergence into a trigger break. Put you right back on the long side here, and a beautiful opportunity to get long here. You didn't even need to wait for Europe here. Asia offered a beautiful trigger on that one. Let's look at the 5-minute. Bear with me one sec, guys. All right, sorry about that. So here's what Aussie Swiss looks like on the near-term chart. Here's what the 5-minute look like. So, just in case today wasn't clear enough as a good day for sort of examples on how to use divergence and how to use triggers. Here's the more every Aussie cross essentially had it last night, guys. Real strong divergence into a trigger break. So price action lower low, oscillator higher low, trigger break to the upside. That was a very, very strong risk reward here. Long at 70.18. Even if you got 70.20, you're looking at basically a 15, 20 pip stop, looking for about 35 pips to the upside. So beautiful setup. As far as resistance is concerned, I'm not interested in any long exposure here. Why? Because you're testing the weekly opening range and major resistance just higher. So I'm out of the long side of the trade. Don't want anything else unless we get another pullback where we can get a decent concrete low back in, or if we break to the upside, a pullback into this region again, maybe test that median line of support to give us a low to trade against. But as it stands, you've made a full round trip. You're right back at the weekly open. Key resistance is right here, broadly looking higher, but we need to make sure that we have a risk to reward in play here. So if you're not already on the long side here, guys, it's kind of late. I wouldn't prompt you to jump in just yet. Look for a pullback. Here's what it looked like yesterday on Aussie Swiss. So we were coming right into this support structure. As I noted, we're basically looking for long exposure right off that level. You got one more low, one more probe of that key region right where we highlighted. And again, that long trigger and divergence was a beautiful mark to get back on the long side here. An interesting pair, obviously, again, we don't always talk about Swissy pairs per se in scalping, but when the setup is there, this setup is there. Look for near-term resistance now, heading to 71.40, 71.59. Eileen says, yes, back in business. All right, cheers. Love the enthusiasm. Okay. Any questions on Aussie Swiss? Euro Aussie we covered, Euro Kiwi we covered, Aussie dollar, Aussie Swiss, and Aussie yen. We did Aussie yen, right? Okay. All right. So excellent. We have ample time to get through your questions. Let me jump through. We covered the dollar yen question for Mustafa. Let me know if you have any other questions on any of the yen crosses, Mustafa. For Chip, SPX, my man, here's what it looks like. So for the SPX, Chip, where is it? There it is. Here's what I'm looking at. And again, I don't really actively scalp this market. If anything, Jamie's much more active in the equity market than I am. But here's my take nonetheless, Chip. So what we're looking at with the SPX, I'm not sure if you're still holding that short position or not. I expect to see a possible back and forth zone here for a little bit. I don't think you're going to get a V bottom recovery and work your way higher. I do think you risk the rally for a run towards 1927 before it turns over again. This is the operative median line structure that we've been playing off of the November and December highs. You can see on a closed basis, although price action obviously stretched way throughout that, on a closed basis, it's actually been respecting that median line structure pretty decent. So I think you get some more back and forth here. I do think you may see a near-term recovery before we make a stab at another low. It's just that the low that you ran into was such a big level. It's the exact 2618 extension off the high, literally almost to the pip. So, I do think you see some exhaustion, maybe some more back and forth here for a while before you make the next move. Keep your mind on the broader scope of things here, guys. Okay, this is a trendline support. Excuse me. Former trendline resistance. This is back in 2012. Resistance, resistance, resistance. Instant break becomes support, becomes support. We rebounded off that last week. Not to mention the low stretch for October 2014, that insane month. that trend line and the 2618. So long story short, off this region, yeah, I think you can possibly see another stretch into 1927. For me, I'm basically looking for the open of next month. On this trade, guys, the monthly opening range did nothing. You just saw a quick sale from the start of the month all the way to the downside. So I think you set up with a decent recovery here. If you get the break above 1927, I'd be long towards the upper median line parallel, and then I'd start to look for short exposure again from here. But Chip, if you're looking for short exposure from these levels, I think that twice. Wait for that pushback towards 1927. If you're looking to intraday trade it, Chip, it's a whole different ballgame. But as far as timing a decent move here for a swing, oh, Chip says I got out of it after your email. Cheers, man. He says was the right thing to do, but was trying to decide whether to go long before getting short again. So you're on my level, Chip. I mean, we're talking about playing intraday, right? There is opportunity, absolutely. And I say that with a smile on my face because I was talking to one of my other buddies on the trade desk here in New York, and we were saying the same thing. I wouldn't have any problem being on the long side for today as far as an intraday thing goes. Move towards the median line parallel again. That slider that took off from the December low has been catching all these rallies, maybe a rally towards that. But I think the range is pretty well defined here. You need to either see a solid push sub 1855 or yesterday's high is basically what I'd be looking for. And above that 1927 level would be a basic 38.2, and it'd be very nice to sort of check the inside of that median line there. That's sort of my mindset from where I'm going from here, Chip. I hope that helps. And again, I appreciate your comments there on the SPX. Again, you get sort of a market hangover after you see huge market swings like this, and specifically on that move that we saw last week on the 20th there. Wouldn't be surprised if this thing does give us a little bit steeper recovery. Chip says, thanks much. I appreciate that, Chip. Thank you. Mary says, can you have a comment on gold? I'm looking to buy dips. Mario, my man, who wouldn't want to talk about gold? Well, I guess if you're one of those guys calling for the short, you probably don't want to talk about gold today, but not us. So for the last 2 weeks, if you guys have been reading, we do weekly forecasts on daily FX, and I write the gold forecast each and every week, and we've been bullish for the last 2 weeks. You know, I caught a lot of heat on that, specifically on the close of, what was that, the week where we ended on the 15th? Where you saw this thing, yeah, right here, complete a 618 of the entire rally. People were getting the most bearish, and this is when I was putting in the bullish call. And it's not because of this, guys. We were bullish from earlier in the year. This break to open up the year has been basically what turned us bullish to start with. It was the first break above 50 that you've seen in 3 months. It was a clear break of the December opening range, which hadn't broken for the entirety. For the first 5 days of December, you set a range, and we closed the year within that same range. So it sets up a scenario where you look for the next month to simply be an opening range break of the previous month's price action. So that had us looking higher. And to note, the drop-off and the sell-off that you're seeing in broader equities. Yeah, gold at these times will tend to catch that haven bid. You know, I almost want to slap my own hand whenever I said safe haven because, you know, you haven't really seen gold function as that in quite some time, but slowly but surely and truly, you'll see that start to creep back into the market. So Mario, I would be very cautious at long exposure from here, my man. 116.30 into 118 was a major target we talked about, you know, since the start of the year. This is a beautiful confluence of the 618 extension off the low, 1618 extension, and the 50% retracement of the entire decline, off the October highs. You also have the median line parallel for the same, or the median line rather, for the operative position that we're in right now. So I'd use some caution from here. I'd be much more interested in trying to get a pullback towards 1100, 1096 to try to press along, but a breach above this, just to put targets in view, you're looking at the upper median line parallel. More importantly, look at that 200-day moving average, and that comes in at 1132. So I think the levels are exceptionally clean here for gold. And let me just fix this. It's just a sliding parallel, guys. So Mary, does that help? He says, yeah, not from here. Right on, man. Right on. I'd be watching that very closely. I do broadly want to stay constructive above 1088. So basically, if you take the high that you made in December and you line that up with the current operative formation that we're in, it kind of keeps you constructive well above here. And the levels are pretty clear on the upside as far as the breakout targets. So I hope that helps, Mario. Let me know if you have any other questions there on gold. Beautiful setup. Again, as a disclaimer, again, I don't have any positions on gold. I wish I did. I haven't traded gold in some time. I was very active in futures on the gold side of things, but not recently. So watch that region of resistance, 1116, 1118. Permendra, I haven't forgotten about you, brother. Euro pound. Here's what euro pound looks like. If you guys recall, euro pound actually, we did highlight earlier this week. Here's what euro pound looks like. Whoop. And here's what euro pound looks like now. Start off with the daily. So from the daily standpoint, for me, the breakout was here. We talked about this earlier in the month, right? 75.50, 75.40 is a huge, huge, huge region of resistance. You're looking at the upper median line parallel for this formation that held for the majority of 2015. You're looking at the 100% extension from the advance off last year's low. Near term, there was also a 2618 extension off that first blip off the low last year. And all of those coincided right here. So the pullback closed last week at this region. We opened this week right above this region. So the obvious or the initial sort of outlook was to look for a rebound higher here. So as we noted, we're at big support for euro pound. We basically need to clear 76.16 to get a clearance for an upside bias. That's this region right here. We kind of blew through it and reversed quickly back below. So here we are, and this is what the near-term chart looks like now on euro pound. So here's where we were to start off the week, looking for our rally to sell. Broader bullish, or the bearish rather, invalidation is still 77. There's a first target, second target. I was looking to get a short from this point. You never got a trigger, and in fact, as we came into that resistance region, momentum failed to break above 70, but you also didn't get a downside trigger till here. This was the first fake out, and for me, I was very, very close to pulling the trigger on a short here against this stop. You would have had a stop of 76.18, 76.38, so about 20 pips stop, right? You're looking for about 23 pips. Would have gotten stopped out pretty quick on that one, right? With this momentum, even the trigger did break. They just didn't see any follow through in price. So I haven't taken a position on this yet. Even that rally into the highs didn't get any divergence before it finally broke down. Near-term support, I'd be looking for 75, same level, 75.80. And then the opening range low is still at that key support. So just to put things in perspective from the daily, this is how critical this support range is. I would still be looking, again, for possible long exposure into that region if we get down there. But for euro pound, at this point, I'm a little bit hesitant. You're too far off the highs to get short, and you're nowhere near the weekly low yet. So Permendra, I don't really have anything pending for me jumping out right here for euro pound personally. I would like to be on the long side of the trade, broadly speaking. Okay. But I do think you run a risk at another stab here towards trendline support before you make the move. Again, 90 pips is the daily ATR, guys. So just keep in mind, if you're looking to scalp this, just be very, very picky and meticulous as far as your entries, because it's all about the entries on a trade like this, especially when you have a 23 pip limit there. Don't really have much room for error. So I do think you make another run at the lows. You test 75.40, 75.50. If you get this deep, I think this is the ideal area where you start to look for a new long exposure. And again, if I just zoom this out for you, okay, that's the basic lower median line parallel for this formation and the current lower median line parallel for the descent. So a drop into this zone sort of be a beautiful opportunity, I think, to try to press along again. Let me also, just for the sake of argument, let me just see what this looks like, guys. Bear with me real quick. Okay, and one more extension. Okay, so you see that 618 extension comes in just above that region. So I'm just going to highlight sort of this zone as an area of interest for us moving into the New York session. Keep that on my radar. But broadly speaking, we'd like to be back on the long side of this trade to get involved in this rally. Remember, the range break that we saw this month, excuse me, is pretty huge. Pretty huge. I mean, we were in this long, huge bottoming process for some time. Look for a decent correction. I do think you see some major upside slope this year for Euro Pound. Questions on that? Premendra, does that help? Does that make sense? He says, thank you, Michael. Got it. Awesome. Mario says, yes. I already got that comment. Right on. Euro, pound, SPX, and dollar yen all covered. So I think that covers things on my end. Let's just take a quick run through some of the dollar crosses before we wrap things up here. So on all the dollar pairs, here's what the dollar, euro dollar looks like. I do have this in an expanding range here. I don't like playing expanding ranges. I typically, just a personal note here, I typically don't perform well in these types of formations from a scalping standpoint. The intraday picture, I think, looks a little bit clear. Just wanted to highlight 109.25, the 618 retracement of that move. We probed through it a couple times this month, but we haven't managed to close above it. It's also coinciding with basic trendline resistance off the December high, heading deeper into the week. So watch that as far as euro dollar is concerned. Momentum also completely dying out. You don't really have much conviction. The near-term chart for euro looks a little bit different. So like I said, a little bit more clarity here, and that you have a pretty decent median line structure off of the highs that you made for the month that seems to be guiding price action rather well. This was highlighted resistance that I was looking at last night. Looks like we pushed right through, came right back. But broadly speaking, guys, just play this as a range. Basically, you need to clear that high that we made an overnight trade to even assume some sort of breakout. And even then, you'd only be looking to play it towards that upper bounds of this expanding formation. So euro dollar, not really on the menu for me, but I'll be watching that closely. Aussie dollar recovered, and we talked about at length. Obviously, we'll be watching that. British pound, I've been getting a lot of questions on the British pound as well. I haven't touched it, and guys, I just don't see anything for me here at all. So for the pound, typically a pair that we like to get involved in, I'm not going to try to call the low here. We talked about all the different variables last week that suggested you want to be cautious, extremely cautious about getting bearish on the sterling down here. That being said, estimated resistance is somewhere near 43.90 still. You're looking at basically the median line formation of the operative structure we've been trading in. So, we don't have no way of validating a major low is in place just yet, but even on a very conservative approach, if we're just taking a measurement of the last leg down, a 236, doesn't even come until 43.50. So 43.50, 43.90, this initial area is where I'd start to look for initial resistance on a rally in sterling. Other than that, not really looking to get too involved. Dollar CAD, especially with what we were talking about in crude prices, we'll look at that in a moment, but dollar CAD on the daily looks like this. So where did we reverse, guys? Please tell me someone remembers how ad nauseum we talked about this 46.58 level for so long. Longer dated 786 retracement. It was the first sort of breakout target once we cleared that upper median line parallel. or the basic channel resistance. So where do we go from here? A basic retracement off of the advance from that low you made in October has a 38.2 right alongside the 2004 highs. So I'm looking at 39.70, 40 basically, 140, 139, 79, 80 region right here. It's also the highs that you made for last year. It's sort of an area for initial support I'd start looking for. It's a correction. We're marking it as a correction already. I'd be looking for a new low to be in play just on a basic type of correction. If we do break this low, to put things in perspective, okay, look where that comes in. You feel like I've driven that. I drew that before. I have not. It just literally worked out like that. 618 comes right in that same exact level, and the 100 right at the 50% of the advance, basic trendline support, and a longer dated former resistance, now support, all right there. So basic equal leg correction down still takes you as low as 37.50. So dollar CAD, I think, is going to be making a lot of noise. This is the formation I was just kind of playing around with last week. Remember, we always talk about, guys, that downside break of a descending formation typically can be the sharpest moves of the trend. Here's the massive drop down here. This is a little bit closer of a near-term retracement just off the lows for the year. So this is just taking into account 2016 trade. And again, now checking the weekly opening range low. So break lower, look for that 40 handle and subsequent downside targets towards that 100% extension. Eileen says, dollar CAD, where was the fib originated that for the long-term 786 on the daily? Let me take you there. I think it's like 2008, I want to say. Oh, way earlier. 2002. So the 2002 high to the 2008 low, or late 2007 low. And I try to color code my fibs, so the older the fib gets, the darker the color gets. All my blue fibs will typically be extensions. All the lighter green ones will typically be retracements and such. So yeah, longer dated down to 2002 on that one. Eileen says, yikes. Okay, yeah. And the longer dated, the more significant the levels can be. But not only that, we're never going to take a trade or base a bias or anything just purely on fibs. They're a tool, and that's all. That's the only thing they are. The thing that makes me add conviction is look at the reaction we got at the 618. And that's always how I like to use fibs, guys. Has the market given us a previous reaction, reflection, or inflection off of that fib series? And certainly that 618 key retracement caught the high for 3 months into the end of the year before we finally broke in December. So it only stands true that the next major fib, the 786, would give us a similar reaction. Lo and behold, that's what we got. Make sense? All right, so over on time, we'll go ahead and wrap that up here. It says, makes sense, valuable. Eileen, I appreciate that. Guys, again, I want to thank everyone for your comments while I was away. It really meant a lot to me. I appreciate that. I will see you guys all tomorrow morning, bright and early, same time, same channel. Remember, we got the Fed meeting starting tomorrow. So we do have the interest rate decision, which will be on tap. No real expectation, and this is not a quarterly meeting, so we're not going to get projections or a presser or anything like that. We're just going to get the quick decision. I don't think anyone's really expecting for them to move on rates. We'll be looking for the commentary in the statement because there's a lot of back and forth on whether we'll actually get the 3 to 4 hikes that that the markets are pricing in from the Fed, especially in the light of the market sell-off that you've seen. I mean, overnight you saw a massive sell-off in Asia equities. I mean, the Nikkei was down again big time last night. It actually closed down 6%. On the Shanghai Composite, 6.4. Shenzhen was down 7%. So you're seeing that volatility still continue to really whipsaw markets around. Keep your eyes on that. As far as crude prices, we didn't go over that. I just want to show you the chart. There's no real change to the levels. The only thing I do want to highlight is 32.95, 33 handle, that's the major resistance. So this thing has actually been traveling pretty well within the confines of the formation that we've been looking at. Wouldn't stress this at this point. I'd be watching this resistance. Okay, we've been within this formation essentially since the highs they made in September and August. It's been holding pretty well, the lower median line parallel, or the slope at least, really dead on. So there's still risks, I think, for a rally back towards 33, 32.95, and this is where we'd expect to see a little bit more of a rigid resistance. Also, on a correction, it would sort of be an easy three-wave up to the upside before you turn over. Watch this in confluence with dollar CAD. If we do get that rally towards 33, it would make sense for that dollar CAD move lower that we talked about. All right, guys, best of luck trading. I'll see you all tomorrow morning. Cheers.